So in today's video, I'm going to share with you exactly how I plan to trade Nvidia this week. I'm going to share my entire trade thesis. And the reason why this ticker piqued my interest this week specifically is because, well, one, we had a ton of unusual call orders that hit the tape last week, and they were unusual even for Nvidia, which is saying a lot because it's went up so much this year. But then two, we saw a lot of dark pool activity as well. And I'll get into that in a second. A third thing and the final thing would be the technicals match perfectly with the setup as well. So I'm going to go over all three of those. And if you're interested in just skipping a part of it, you can click below to skip to each section. So if you're not interested in the flow portion, you can check out the dark pool portion by clicking below on the bar on YouTube. So without further ado, here's my trade thesis for Nvidia for this week. First of all, like I just said, we have a ton of unusual call prints. This one is very striking. This is in the historical flow tab, by the way, on Cheddar Flow. I have it filtered for over 1 million in premium. I want to see what the big boys are doing, where they're putting their money. In this case here, putting their money in 142 calls for the 321 expiration. It's the March expiration, about 4 months away. Not too long, not too short, just about in the middle. And 7 million is a lot of premium, even for Nvidia, which is something that gets quite a bit of premium to begin with. So this is a very unusual order to me. Bullish. I like that it's out the money. Helps directionally speaking, plus it has that March expiration. As we scroll up throughout the week, you can see over here 1.2 million print. This one's a little bit deeper in the money, and also it has the June expiration. This isn't as helpful to me compared to this $7 million print, although it's still interesting to see this call buy. As we scroll up, you'll see a lot of call sell orders, and you'll see they're in red, which you'd think would be just bearish. But personally, just based on experience with order flow, a lot of this seems to be call monetization. So this isn't necessarily them just selling calls to open, trying to collect the premium because they don't think it'll go anywhere in the near term. A lot of this is likely due to them cashing out on previous positions, specifically in the March strike. And that's likely because Nvidia's went up so much this year. These people are taking profits on those positions. And really, you don't see much put activity, all things considered. Pay attention to that. This is the entire week, by the way, all the way from November 25th to the 29th. Again, filtered above 1 million in premium. You don't really see many puts, and those are directional, bearish, directionally speaking, compared to just call sells, which are more neutral, all things considered. As we scroll up here, searching for some more unusual prints, we see another one here, 1.9 million in premium, so decent amount. Not quite the 7 million, of course, but this is still decent, even for Nvidia. And then over here, 185 strike. That is far out the money. The spot price at the time they bought it was 137. If we go to the chart here, you can see the high, at least the current high, is 153, 152-ish. So 185 is quite a ways away from where we are right now. It doesn't have to go all the way up there just for them to profit on it, of course, but still, this is an aggressive bet as a pretty far out the money strike. Always good to see, directionally speaking, and then also has the March 21st expiration. Again, not too far dated, not too short dated, just about in the middle. So this is super unusual to me as well. And as we go up some more to find some other unusual prints, you see a lot of call monetization. This one here, 2 million in premium, but doesn't really help me that much because it's for the September 26th expiration. So it is a leap order, well over a year until expiration. I personally am only interested in trading about a 2 to 6 week period for Nvidia here. So this order doesn't help me at all. So I can just throw that away. And as we go up even more, $6 million print, also a ton of premium here, 140 strike. And this one's for the February 21st expiration. So even closer. We're only 3 months away now from that. Above the ask as well, shows some urgency. And again, 6 million is quite a bit. 6 million, 7 million, all of those are pretty high premium call orders. Love to see that. Like to see that it is out the money as well. Shows that directional aspect. And as we scroll up, more short dated ones here. These already expired. And then this one here, too deep in the money for it to be directional for me, despite it having a 5.2 million in premium. And really, this is the only bearish print that I saw all of last week, which is crazy to think about. A $1.6 million print for the 134 strike, short dated, expires in 3 weeks. So only a $1.6 million print out of all the other ones that I just showed you, plus some of these other ones we saw up here. It's very skewed to the bull side. I like to see that. This is a bullish variable, at least order flow, all things considered. So after I saw that, I decided to look at some other aspects. The second aspect here would be dark pool premium. We saw a lot even for Nvidia. Like I said with the order flow, Nvidia has a lot normally, so it takes a lot more for me to deem it unusual. But in this case here, this is unusual. $510 million print, 920 million, 920 million, and a 310. That's over 2 billion in premium. And remember, dark pools are only shares. This is not options. These are private exchanges that only only institutional traders, investors, etc. Can access. So you and I, as retail traders, cannot access these dark pool exchanges. We can only trade off of lit exchanges. That's like EdgeX, Arca, etc. But dark pools are ATS, which is an alternate trade system, and these institutions can exchange shares on those dark pool exchanges. In this case, they exchanged quite a bit of shares. And it's interesting to me is a lot of these came around 136.02 specifically, as you can see here, and then 138.25. Well, if we look at the chart over here, something interesting happened, and we'll go to the daily to show you a bit better. But we had a pickup candle occur over here. So pickup candle last Wednesday. And the reason I know it's a pickup is because there's a large wick under it and it closed green on the day. So we dipped down intraday conveniently below a local low, which is typically where they like to take people's stops out, which is probably what happened here. And then it picked up and closed bullish on the day. Well, interestingly enough, if we go back over to here, 136.02, we mark it on the chart because you can see we closed right here at 135.36 roughly, and then 136.02 is just a tad above that. And then the following day, it found support off that level, interestingly enough, and then bounced and closed bullish again on the daily. And then if we go over to here, the 138.25 level, we can mark as well. That's the closing price of the day on Friday. So just around here, and it closed right on that level. So we have $2 billion plus worth of dark pool premium all around this range after a pickup candle, after we saw a bunch of bullish prints all of last week with a lot of premium. That certainly piques my interest. That's three variables that are bullish. So in this case here, just because there's three variables that are bullish doesn't mean that tomorrow morning at market open, I'm just going to buy Nvidia calls and not even look at them afterwards. And I'm not going to have a trade thesis. I'm not going to have a specific entry. That's not how it works. Or you're going to lose money, probably blow up your account if you keep doing something like that over time. So I like that there's three bullish variables, but I still need to develop my entry and risk requirements, which is the final stage of a trade thesis. I can like a lot about a setup, but until I find a proper entry level and a proper risk level and price target, then there's no reason for me to add that position. So what I'm doing here is I'm on the 15-minute chart. Actually, it might be a bit better to look at the hourly, give it a bit more time. But in this case here, I'm on the hourly chart. And as you can see, there is a demand zone, our previous demand zone, now supply zone because we broke below it, and another supply zone up here. Well, if you remember in the last week's video, we were stuck within a range. And I said if we broke above or broke below, that'd be where the next trend is. Well, we broke below the range, we retested it, and then fell a lot more. But then we had that pickup candle, plus the flow, plus a lot of the dark pool prints, like I just told you about, which means that there could be a potential for the range to be reclaimed over here, which would be very bullish because whenever you have a range breakdown that's a failed breakdown and it reclaims the range afterwards, which would basically entail getting back above roughly 141, that shows that all of this over here was accumulation. There's a ton of demand under that range, and typically that results in a quick short squeeze a lot higher, bare minimum back to the top of the range, which would be a very nice about 9 or 10 point move from a break above 141, which is exactly what I'm trying to trade here. So if we were to break back above into the range, which again would require above 141, you have to get back above 141, then I'd be willing to add that position with an hourly close back above 141. I don't care about a minute candle. I don't care about a 5-minute candle. Those are useless to me. I want to see confirmation. So hourly close back above 141. Let's say it happens at 141.81. If that happens, I add calls, likely January calls in this case to give myself time. Could also go December for 3 weeks. I'm not opposed to that either. But in this case here, I'd add that call position and my risk would automatically be a breakdown back under this green zone, which would be roughly 139. If we fall back under 139, let's say it tanked afterwards, fell back under 139 and closed an hourly under, then I would stop out of that position, looking at about 3 to 4 points of risk on that. The inverse in this case, which probability is heightened, of course, once you're able to reclaim a range that it continues to the top of the range, like I just said before, the inverse is it goes all the way up to 148, 149, 150, and I can cash out handsomely on that. So I like the setup from not only all the other aspects that I told you about earlier, the flow, the dark pool, technicals, but also I like it as a risk reward, which is always what I'm looking for as the final piece before entering a setup. So in this case here, hourly close above, what I'm looking for is my entry trigger. Risk is back under 139. It doesn't have to go straight up from there. It's pretty likely, in my opinion, that it will go straight up if it's able to reclaim this level. It could just chop if it wants and then go up. That's fine with me. That's why I'm buying time. But this is the thesis for me personally. Also, it doesn't have to go straight up on Monday and close close, an hourly candle close above, it could, as you can see from this rough sketch down here, it could form an inverse head and shoulder still, and then break above. So in this case here, it would fall down to maybe 136 on Monday or Tuesday, and then pop back above this level, reclaim the range. I'd add on that breakout above, and then look for continuation after. So there's multiple scenarios here. I'm ready for any of them personally. And also, there's another scenario where Monday comes around and it just tanks for whatever reason and goes down below the local low, or maybe it waits till Tuesday or Thursday and just tanks from here and it never fits my entry criteria. Well, in that case, I just don't trade it. There's zero reason for me to trade a setup that does not fit my criteria. And for whatever reason, retail has a difficult time understanding this. If you put a lot of work into a setup, people think that you should just trade it regardless if it fits all the criteria. They want to force the setup into existence, and that will only result in losses over time. So if this setup does not fit my criteria and it just were to fall down to around here, or maybe it takes too long and it just wants to chop around for a while, then I'm just not going to trade it. And I look for other setups instead. This is just one of 5 different setups that I found this week. And I wanted to share this one with you guys so you can understand not only what I'm going to do, but also the thought process behind the setup itself, because that's arguably more valuable than just this setup alone, because then you can repeat it over time. You can form your own thesis, add on to the things that I shared in this video. Maybe it was something that you're more used to as well with your own indicators, and then you can develop a robust trade thesis. And that's the only way to profitability in the long term in trading, regardless of what other people tell you, because they're not usually serving your best interest. So I'll leave you with that today, and I will see you guys in the next video.